Jacques from Mortgage Allies here. I hope you're having a great day so far, and thank you so much for joining us. We've had I think pretty much the whole of Southern Ontario, we've had some serious thunderstorms. So thank you for joining us. I really appreciate it. And well, as is our habit, we are here every last Tuesday of every month, and to bring some pretty good mortgage content so you can learn, prepare yourself, and get yourself in a very best position to get the very best mortgage. And so hopefully tonight will be just like the other ones, where you get to learn a lot of stuff. And you know, we are under no illusion that talking about what documents that you need for a mortgage, it's not the sexiest topic by any means, okay? But it may just be one of the most important topics to talk about, because as you'll see shortly, mortgage documents, if you cannot are essentially represent your mortgage conditions, and if you cannot fulfill your mortgage conditions, your mortgage won't close, right? So it's a pretty big deal. Okay. So what you need to know about mortgages, most of us are asking the obvious question, and we're probably not doing a too good a job of that about getting a mortgage, because you know, getting a mortgage is one thing. Okay, do I have a mortgage or not? The greater issue is, okay, well, I've applied for a mortgage, the bank has told me I'm approved, now am I okay? Well, kind of, okay? And so we'll talk about that right now, okay? Because your mortgage, if it's approved, is subject to you, the borrower, fulfilling the lender's mortgage conditions and terms. Well, your mortgage conditions and terms are represented by the documents that you have to give the bank, right? And so those documents are literally all important. And I think that most institutions don't do a very good job with mortgage documents, okay, or fulfilling the conditions. Most institutions and brokers actually will leave it, let's just say you put an offer in here, and let's just say you got like a 60-day closing. Many of them will leave it right until there before they do that. That is not good for you. I can tell you now, that is not good for you at all. You want to do it here within 5 days. If you're putting in the offer, those documents should be straight to the bank, and you should insist that they sign off on it. Now I got to tell you that we've gone so far as that we insist to only work with lenders that will sign off your conditions within the first 5 days of you putting in the offer, okay? Do we always get it right? No, we don't, but we try our very best to do that, okay? And so if you, as I said, if you do not fulfill your mortgage conditions, your mortgage doesn't close, and that can put you in severe financial hardship, okay? And so you should be very meticulous on those documents, and you should also insist that whoever you work with a broker or bank, that they really do you justice and do real great work for you, okay? Now, of course, you know, I could probably write a book of like 500 pages just on mortgage conditions. It's a crazy long topic, and so please give me some grace in the sense that there's no ways I can cover every single thing in this webinar. And I cannot cover every iteration or vague possibility of how you can cover your, you know, what documents you need to give to us in what kind of circumstance, right? So it's important to just to take that into consideration. Okay, so on this page here is one of the biggest thing we hear from clients is like, why are you asking for me for this stupid document? I don't think I need it. Like one of my clients basically was transferring money from a different country to Canada, for argument's sake, and they were saying, well, wait a second, why are you asking me for that document? Because the institution where the money is coming from is already Canadian FinTrack approved. Well, that's true, but we also need a record if you transfer money from one Canadian bank to another bank. So it's two different acts, and so two different laws. And so it's like, okay, why are you asking for that? So I'll let you into the kind of, it's not really a secret, but nobody talks about it. So it kind of becomes a secret by default, is why do we ask documents? What do lenders use to determine what documents they need from you? Okay, so in vague terms, again, this is a big and vast topic, but in vague terms, we use the 5 C's of credit to determine the lending risks, and in turn, the supporting documents a lender will need from you. So number one we use is character. What's a general impression you make to a lender as a potential mortgagee? So what does that mean? We ask for three years of addresses. We ask for 3 years employment. So like, Jacques, I told you I'm working with this company now for 1 year. Why do you need to know who my previous employer was? Is exactly that. The lender wants to know, 3 years of history, because they're looking for stability, looking for what you look like on paper. Other one is like, somebody's changed jobs every 2 months. That does not necessarily look good. And I'm not trying to be judgmentally, but somebody is like 36 years old, living in their parents' basement, and they haven't saved a cent, and they're making $150,000 a year. That doesn't look good to a lender, right? So all of those things tell a story. So you can have situations, doesn't happen often, but you can have situations where somebody meets all of the underwriting criteria for a lender, and the lender says, no, can't do that. Okay, can't do the mortgage. Like, why? And it's because of something in here. And the problem is, lenders won't necessarily tell you why. They say can't do the loan. Okay, it's in that sense, it is somewhat random, to be honest with you. I want to say that many brokers or banks who don't do a mortgage well will always say like, no, the bank didn't want to do the mortgage. And no, wait a second. There are some things that are gray in the mortgage industry. There are, okay, like I just explained. But there are many things that are black and white. And like, if you're employed, I need an employment letter. Boom. Like, there's no like, should I know? No, I need one. Okay. If you have a corporation, I need articles of incorporation. That's black and white. But there are things that are gray. Now, I'm leading up to one thing here. In this crazy market, and you can see I get right in my soapbox about this stuff, is, oh, you don't need a conditional finance. Really? What if this happens? This cannot be evaluated through a pre-approval process, okay? A lot of these things cannot be evaluated through the process. So when somebody waives their conditional finance, they are saying goodbye to this. They're saying everything will be okay. And it's a dangerous precedence to skip. Okay, let me move on. Number 2 is collateral, is the property. In other words, how suitable it is and how marketable it is, and a whole bunch of other things. Okay, now, as I said in my previous webinar and many other ones, the property can only evaluate it once you have bought the house. Okay, you cannot evaluate something you haven't bought yet, of course, right? But that is a big part of the picture. Now, in general terms, a property in Oakville, Ontario, is way more marketable than a cottage on leased land on stilts in like way North Ontario. So you cannot treat properties the same. Or actually, if you have a property in Oakville, Ontario, but it's got turrets and it's got fancy stuff and it's completely unique in the neighborhood, that property is not as marketable as a normal residential family home that was built in Oakville. Because again, what lenders look like lenders don't lend money to take homes from clients, to be clear about that. But what they do look at, if something does happen, how marketable is this property and how quickly can they sell it? Okay. That's why if you buy land is not very marketable. And that's why most banks will not lend money on land for long term. Okay. Number 3 is the capital. So how much money are you as a borrower investing in the property, AKA the down payment and the closing costs, right? So again, somebody is, I'm picking on the 45-year-olds or the 35-year-olds, and they're making $150,000 a year, and they've lived with their parents in the basement, and they don't have a single cent saved up, and all their money is gifted by their parents. While it's legitimate for the gift to come from the parents, the question is, how much, quote unquote, as we say in the industry, how much skin in the game does this person have in their property? So that's a big deal, right? But those typically follow the legal requirements. Like if you buy a house under $1 million, under $500,000, 5% is fine, okay? And so we look at that. Credit is a big deal. So many people are very skittish about their credit. Hey, Jacques, please don't check my credit. And I go, if I can't check somebody's credit, I can literally not pre-qualify them because I'm literally flying blind. Okay, so as much as we get nervous about a credit check, the risk of not having your credit check and somebody making an opinion on what you can qualify for versus your credit score probably not going to go down, but you'll know your broker will knows exactly what your credit situation is. The two are chalk and cheese. Obviously, the better one for you is, assuming that everybody's responsible, is for your credit to be checked so you get a genuine pre-qualification. So your credit worthiness is a big deal, but there's a trap here also. A lot of people are like, oh, my score is 820 on Credit Karma. I'm not picking on Credit Karma, but remember, Credit Karma is not weighted for mortgage lending, right? So the credit bureaus that we get are weighted for mortgage lending. So you got to be careful and we cannot take third-party credit reports. We cannot. We have to check it directly ourselves, okay? And then the capacity. In other words, what is your ability or the likelihood that you'll pay this loan back? And we measure that, amongst other things, through what you call your debt service ratios, meaning the total debt service ratio and the gross debt service ratio. And this is where we use the dreaded stress test. This is where the 5.25 or higher stress test rates will come in here in your capacity to pay. That's exactly where we apply it. So lenders look across all of these, and so you can see under collateral, we'll need an appraisal once you bought a house. We need a purchase agreement. All of the documents are pretty much attached to this. Under capital, we would need your bank statements. If you get a gift letter, blah, 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 everything goes around here. And here's if you have too much debt, it'll be reflected here. So pretty much everything comes from here, okay? And I hope you don't misunderstand me. Sometimes when people struggle to like, why do I need to give you this document? Kind of like reverse. Let me step back 1 second here. I do believe sometimes banks are way too conservative. I kind of joke with them. I'm like, if Bill Gates walked into our bank sometimes, I wonder if they'll give him a mortgage, right? So sometimes I think it's over the top, to be honest with you. But if it helps you, think of it like this. If it was your money that you were going to lend to somebody for $500,000, would you just do it and be like, you're good, don't worry, I know you'll pay me? Or would you like, wait, buddy, I got to see this, I got to see that? Sometimes I think some of us would be, including me, maybe sometimes a bit stricter than the banks are, right? On top of that, which we'll see in the next page here, is again, we're sticking with the topic as to what's important for you to know about mortgage supporting documents, right? So number one, it's determined by the 5 C's of credit. The second year is there are federal mandates. So even if the banks may not want to ask you for a document, they have to. They have no choice. The government, through OSFI and other institutions, finance ministry, they have to ask for certain documents. One of the things is the Anti-Money Laundering Act. Oh my gosh, if there's ever an act that drives Canadians crazy, it is this act, because we are honest people for the majority of us, right? And so we don't think of things like fraud. So you'll see later on in the presentation, if for your down payment, we need 3 months with a bank statement, and we need you to verify and provide a paper trail for every deposit, unmarked deposit, more than $3,000. Now, that eventually feels like I'm asking for DNA samples. Like, it's just crazy. So here's a good example. Somebody gets money in and they get paid into the one account, but they have other accounts that they've allocated for savings. So they take from their main account, they transfer $5,000 to that account, and then from that account, they transfer to another account. Well, when we see that and it just says deposit or transfer, okay, we have to ask you for those documents until we see the actual source. And it can be exhausting. It really can be, okay? But banks have no choice. They have to ask that. And we have no choice but to, quote unquote, drive you crazy until we get all that information. It's pretty crazy, okay? Number 3 is everything is in writing. So like, no, Jacques, I know my employment letter says that I'm scheduled for 40 hours, but I'm actually, my boss told me they guarantee me 40 hours. And I go, hey, I could probably believe you, but if it doesn't say that in writing on your letter that the hours are guaranteed, can't use it, okay? And on top of that, all the documents you give us must be from an arm's length third-party source. What does that mean? It means it can't be written. If you're the owner of the company, you can't write your own employment letter, okay? It has to be from a third party. That's why we don't ask people to write a letter to say, last year I earned, $65,000, we ask you for your tax returns from a third party, the government, to verify that you earn that money, okay? And so while lenders may verify written information, they will not accept verbal information as true, okay? Number 4, which is so important, you do need to understand, this is so important, is that requirements are always changing, okay? Always. And what is crazy about it, those requirements are changing without announcement or notification. Like banks are just like, look at COVID-19, okay? COVID-19, like my clients are saying, gosh, like what's going on? Like you guys are asking for so much information or so many documents. You're 100% right, because banks are like, with COVID-19, who's laid off? Who's not laid off? And so they're asking for a bunch of extra information, right? And so it's like people like, I got a mortgage last time and it wasn't like this, man. What's going on? And it's because of that, right? So, changes in rental market. All of a sudden, people with rental properties, they found it more difficult to qualify for rental properties. It's changed for the better now, but banks have that, and so they can do that. And so, you got to be careful. All of these things can be changed, and as I said, they done without announcement. And so that is, again, when people say, oh no, I'm good, right? I'm not going to ask for conditional finance. That is the risk. Things change all the time. You may have a lender with an investor in the back end that says, oh, I'm not accepting any money transferred from a certain country. Oh, who knew? Okay, you just discovered it. Or, oh no, we've decided because we feel that the condo market is now higher, we're asking for a sliding scale and down payment. We don't just accept 20% if you go above $1 million anymore. Oh, who knew that? And we discover it literally as we submit the application, okay? And so again, you gotta be very careful. These things change on the fly, and it's really important that the entire real estate community understands this, okay? It's very, very important. I know I get intense about this stuff because honestly, it's just to protect you. The next thing is documents up front. So here's a precedence that I've seen in the industry. Like, oh, you want a pre-approval? I'm probably simplifying. I'm definitely simplifying. Oh, you can file the mirror? We'll get you a pre-approval, because you know what? That pre-approval actually, between you and I, is not worth the paper it's written on, okay? So look here, as I said, any broker or bank who provides you with an interest rate or mortgage options before checking your credit, reviewing your supporting documents, and establishing your eligibility is making an irresponsible guess, literally, okay? It's like, it is not doing you a favor at all, okay? Because documents are so important, so much can go wrong if you can't commit your conditions. You will be best protected if we ask you for all your documents up front, like the primary documents, which I'll show you in a second, like anything that can have catastrophic consequences. Income and down payment and identity. Those things are absolutely, and obviously credit. Those things are ultra important, and you should insist that those documents be provided before even gives you a letter, okay? So next one is also an important thing to remember. And a lot of people are like, oh, I'm approved, right? And I go, and I've given all my documents. I go, yes, but, okay? Lenders reserve the exclusive right to request new, updated, additional documents from you at any time for any or no reason without prior notice or warning to meet their risk requirements. Okay? It doesn't happen often, but like, remember, so you get an underwriting process. Mortgage is approved. Then it goes to what's called a fulfillment process. Okay, that's where they check all the documents and make sure everything, all the conditions are good. Okay, then it goes through to auditing before the lawyer gets instructed. At that auditing stage, if that auditor wants to see that or whatever they want to see again, they will ask for it. Okay, and so if you don't have that, then you will not qualify for the mortgage, or you will unqualify for the mortgage, okay? So it's up to lender discretion. I don't want to create the impression like it's a big black box. I'm just saying to you, those risks, they do exist, and you need to be careful and be warned about them, okay? The other thing is some documents expire, like your employment letter. They are typically only valid for 30 or 45 days, and so is your credit report, and so is your pay stub, and also your bank statements. So what does that mean? Once we've submitted for a live application, you've already bought the house, we submit that to the lender right away. Once it's in, they will not ask you for a new one. They may, but they typically won't. But if we do a pre-qualification for you and we've given us your documents and we do need those, and we're not going to ask you for every month for a new one, but if you're waiting 60 days to submit an offer, then we're probably going to need a new employment letter from you, okay? But again, sure, gosh, now I'm going to ask my company for another employment letter, I get it. But again, the risk of not having your employment letter or your pay stub up front is way bigger than the hassle of you having to get a second one. And I'm not frivolous, I'm not flippant about you having to go and get more documents. I'll tell you about that later on. But I look at risk, how to protect you best. Make sense? Okay. And then here's a big one. Once approved is not always approved. And so what does that mean? So I can just lose my approval? No, not the case. What you do need to know is you must meet and continue to meet the mortgage conditions right throughout the pre-closing mortgage process. So it's from application to closing dates. Of course, you need to meet the conditions, continue to meet the conditions after closing also, but I'm just talking about you getting the mortgage stage right now, okay? So in other words, how can a mortgage be kind of reneged? Okay, so let's just say you are approved for a mortgage and then somebody loses their employment. I don't have a job anymore, okay? Or I bought myself a very expensive car and now my debt ratios don't work anymore. Or my credit score has gone down to the point where I don't qualify anymore. The lender has every right. They typically, check credit up front, okay? And typically won't check it again. But remember, there's mechanisms in the market for them to monitor somebody's credit without actually checking it, okay? So if that ever gets checked again, 5 days before closing and somebody's gone below the minimum credit, they will not qualify for the mortgage anymore. And the lender has a right to cancel the mortgage and you will not have a mortgage anymore. So it's high alert. You have to be careful. It's just because you're approved up front, or I can't come and say, hey, I was just laid off my job. We can still go ahead and buy a house. I'm like, no, you can't do that because you don't have that income anymore, right? So be very, very careful about that. Okay, number 8. Number 9 is always a good laugh. I use the kind of is a bit of a joke, but it's true. You call your insurance broker, you call your insurance company and say, listen, insurance company, I just had a major thunderstorm. This is not really happening. I'm just telling you as an example. And there's a big tree hanging over my house here. Am I still protected by insurance by that? And the insurance company says, now that we know, no, you're not. Okay. Well, if you call your broker, typically you can say, hey, broker, I got this tree, blah, 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 hanging on my house. Broker says, well, you better deal with it. Otherwise, you won't be covered. It doesn't work like that with mortgage brokers, okay? So when clients tell me, Jacques, I just want to be upfront with you, and I go, wait, just so you know, that upfront with me, if you tell me I'm not a lawyer, I can't just ignore that you told me that. I have to disclose that. So it's hey, Jacques, I just wanted to upfront with you. I got 3 properties in Switzerland. Well, I got to disclose those now. I'm going to ask you for more documents, okay? So we do have a fiduciary responsibility to declare what you tell us to lenders. So there's no such thing as, oh, that's okay, you told me that's between you and I. It can't do that, okay? We cannot do that. So be very careful about that. I'm not suggesting you should hide information. I'm just saying if there's ever any misconception, or you can tell your broker, you would tell your lender, it doesn't work that way, okay? So just so you know, all right? Okay, let's look at what are primary support documents. I hope you guys are still good, and I'm not going too fast here. But let's dive into what are primary support documents. I referred to those earlier. So basically, the documents that can severely affect your mortgage eligibility are your identity, the income, down payment, and property details. Well, at the time of pre-qualification, you don't have a property yet, so I can't really ask you for anything about the property. You can tell me that it's potentially a condo. You can tell me it's probably a detached house. You can tell me that it's in Coquitlam. You can tell me that, and I can take that into consideration, but about the actual property itself, we can't, okay? So what are primary information that you really need to understand you can expect to give this to your mortgage broker or bank, okay? First of all is the application, okay? And so for me to give you any opinion, I need to obviously have the essential information to be able to check your mortgage eligibility. So what is that? Your first name, last name, your address, your date of birth, your SIN number, your income, your assets, your down payment source, I'm going to ask you for all that information. Okay, so understand also though that we are very much governed by PETA. I'm governed by my own ethics, but we're also storing information beyond 256 bit encrypted firewalls. Okay, so we do protect your stuff, all right? So important that. The next thing I'm going to ask you is I'm going to send you a consent form I need your consent to check your credit, and then CASL is the Canadian anti-spam legislation. So we cannot, unless you reach out to us, we cannot just send you a bunch of emails. We can't. So that's why we sign that up front. We do need to verify your identity. So if I, for argument's sake, we do all our meetings and have been since 2019, just like I'm doing with you now on this webinar. If a client sends me their photo IDs, when we in the meeting and we actually review your options with you, I'm going to have to ask you to turn your webcam on because I need to be able to verify your identity. Okay, and I'm sure you want me to do that too because you also want to know who I am, right? Yeah, you want to make sure that at least I look reputable, right? And so it's an important part of the process. The next thing we look for is your income verification. That's major. Like we can't buy a house without income, and that's what saved us from the big crash in 2007-8 that the Americans went through, because they did mortgages essentially. I don't want to be unkind, but they did mortgages on a whim. Okay, and we don't do that in Canada. And the next one is we verify your funds, the funds verification, which is your down payment and closing costs. Okay, so these are the primary documents that if we don't have those, they could actually be catastrophic. Some of them we can't even proceed. Like if we don't have this, we can't even proceed. Okay, so what I'm going to spend time on for the rest of the webinar is the income and funds verification, because income typically is the biggest, thorniest issue and the one that riles people up the most. Short on its heels is down payment, but definitely I would say income is right up there. Okay, so let's dive in here. Okay, what income documents we require from you is dependent on your income source, okay, who pays you, your income, the nature of the employment, and how long you've been with the employer, your credit status, and the compensation structure. How do we mean with that here? Is the income source, are you paid by your own company? The nature of employment, are you part-time, full-time, on contract? How long have you been with the company? What's your credit status? And how you're compensated by the company also, okay? So this is a general rule, but as a rule, and this can be for some, I own a corporation, so I understand how this works. But as a general rule, lenders usually require fewer supporting documents from borrowers with stable income and arm's length reputable income sources. That's a mouthful. Let me explain. What's an arm's length organization again? Anytime where I have say over what check I can write myself for an income, that is a non-arm's length organization. In other words, if I can influence, I can cut myself a check this month for this much and next month for that much, then I'm not arm's length, and essentially then I become self-employed. Okay, that's kind of the acid test. Okay, and the other one is if my taxes are not deducted at source, I am probably considered self-employed for mortgage qualification purposes. Okay. The other one is a reputable income source. Now that all of this stuff can be very offensive to self-employed people. Like, what are you saying, man? Are you saying my business is not reputable? No, I'm not saying that. I'm a self-employed guy. What it means is that reputable income sources is if a lender can't find an employer on the internet in 2021, that creates suspicious. There's no law that says a business must have a website. But in today's world, if a lender cannot find an employer on the website, that on a Google search, that's not good. Okay, they can ask for more information. If a employee does not get a pay stub, or you can see it's made on Excel, none of this is illegitimate. They are completely legitimate. Okay, but this is the thing that annoys people. It's not quote unquote normal from a bank's point of view. Okay, those things are really annoying. The other one is if somebody gets paid by check still, okay, and they only have the pay stub, the check stub, or their pay stub show no year-to-date income, or the income is random every single month, even though the employment letter says that it's, it is salary in a guaranteed income. That's not good. Or it's gonna, not that it's not good, it's gonna be requiring more documents, okay, more scrutiny, okay. Conversely, more income support documents will require from self-employed, variable income, and damage or high risk applicants. Okay, so let's define these terms here. Okay, let's have a look. So who is self-employed? Now, this is what's weird about the mortgage lending industry, is that this is not necessarily how the government would define somebody to be self-employed, but this is how mortgage lenders typically would identify or would treat somebody as a self-employed applicant. So this is important, as we said, any borrower with a non-arm's length relationship to their income employer or income source is considered self-employed for mortgage qualification purposes. And I was, not to repeat myself, but if you get to say how much money you cut yourself this month, and I'm not saying like, oh, I work hard, therefore I get a bigger check this month. No, I'm not talking about that. I'm talking about you can literally, even if you haven't worked hard, you can cut yourself a big check, okay? Then you're essentially deemed self-employed. So these are corporation owners, partnerships, sole proprietorships, independent contractors, major shareholders for corporations, any borrowers whose employer is not deducting taxes at source. Oh, Jacques, I work for company XYZ as a multinational company, but they don't deduct taxes for me at source. You are deemed to be self-employed for mortgage purposes. Now, this is a thorny issue for employer people. I'm one of those people. I pay myself, I have to, if I have a corporation, pay myself by T4, okay? So in other words, if I pay myself by T4 measurement, then the taxes are deducted at source, but am I not just an employee of my company? Yes, I'm an employee of my company, but I'm not at arm's length. So therefore, I would still be considered to be self-employed. I've had many corporation owners, I'm laughing with you here, is get really annoyed about that definition, okay? Okay, number one, variable incomes. What does that mean? These are applicants that are not self-employed, but their compensation may include bonuses, commission, overtime, investment income, rental property income, etc., or the employment may be part-time, seasonal, casual, temporary, etc., etc. So at any time where it's not like my salary this year is $95,200, if it's that overtime, everything like that, then it is not, it is variable income. So we'll ask you for more documents, okay? So what is stable or regular income? Many people will debate with me and say, Jacques, there's no such thing as stable income. Well, just check, Jacques. If you're not sure, check COVID-19. Like, who was stable? Who was guaranteed their jobs? Nobody was. I get that. But from a probability, mortgage lending probability, people with full-time, salaried, permanent income, and or somebody with minimum guaranteed hourly income typically falls in this category, okay? They get asked for the least documents, for sure it is, okay? And then income source also. If a lender cannot find, as I said, your employer on the web, they can ask you for more information. The other one is high risk or damaged credit application. So what is high risk? Somebody who doesn't have enough income to qualify under traditional prime lending criteria can go to an alternate lender who maybe have higher TDS, GDS requirements, so they qualify under that. So they get, they get a higher rate for that privilege, okay? And obviously somebody who with damaged credit, they will be asked for more documents or different documents to prove their income criteria. So again, there's a mouthful here. We can spend a month of Sundays just talking about this stuff, okay? So I don't want you to fall asleep in the meeting. So, all right, so let's look at self-employed applicants. What will we need for self-employed applicants to prove their income source? Here we will deal how we prove the actual income. Here we want to first see what it takes to check whether their income source is legitimate, okay? So very, very important in big red underline, if your company is not active or registered for at least, or your business is not active for the last 2 years, you will not qualify under prime lending criteria. So, in other words, I registered my corporation in February 2021, Jacques, can I qualify for a mortgage? Not yet. You have to wait for 2 years. Now, there are some exceptions to that. So in other words, I was a, um, you know, I worked for a company in the whatever industry, and now I've gone into the same industry, and I'm doing the same business, but I'm now in a corporation. There's a chance that that could work. Okay, there's a lot of. I'm going to ask you for a lot of documents to verify that, but there is a chance. Okay, so for corporations, we will ask you for your articles of incorporation, and we need always the full set of documents. Okay, you can't be like, oh, I give you the first page, right? No, we need everything. And also, the other thing with documents is, you can take a picture with a phone, but my caution to you is be very careful, because the kind of more stuff gets cut off, I'm going to drive you more crazy, because anything that's cut off, it may look like you're trying to conceal something. I know you're not, but I'm just saying that's how banks work with massive radars on their head, right? Anything is like, you give me documents last minute, you give me like, you're saying to me that's the only page of the document, but I can see in the picture there's like 5 other pages behind that. All that kind of stuff doesn't add up, okay? And the bank can just walk away and say, we're not proceeding anymore, and they will not tell you why, okay? The other thing that we as brokers need to understand is we're very careful, because we have a back-end system called RedX that measures us. If a broker is submitting fraudulent document, that broker is going to be flagged in the industry, and all of a sudden that broker, nobody will tell the broker, but they'll find out, oh, lender Y doesn't want to work with me anymore. And then like, oh, I can't submit my client's mortgage anymore. It's devastating, okay? Thank God we've never gone through that, but I'm just saying to you, so lenders, brokers, they really need to be cautious. So there are great apps, like you can, like Dropbox, for argument's sake, has its own built-in scanning app. It looks just like you photocopied it, okay, or scanned it. So use the apps available to you and send it to us in PDF format. You really want to do that, not JPEGs necessarily, okay? And you can also, those apps can also allow you to collate the documents into one, like if it's 10 pages, you can put all in one document, all right? Okay, so for corporations, we need the articles of incorporation. If you have a partnership or a proper quote unquote sole proprietorship, then you should have a master business license, okay? We would need that. Now, the word sole proprietorship is kind of like weird, because sole proprietorship can also mean somebody who's just operating in their own name, okay? So what I call is all other self-employed applicants. Okay, so for us to verify that somebody is self-employed in that cases, we need the T1 generals, including, very important, the statement of business activities. That is an addendum as part of your T1 generals. Okay, that will tell us whether you're self-employed. Now be very careful, because the code that you use in there for your industry must match with what you're actually doing. Like for argument's sake, if somebody says, oh, I'm in the interior decorating business, but their T1 general shows they're a hairdresser, the bank's going to say, wait a second, there's complete disconnect in here, okay? And so here's the thing I want to tell the self-employed people. Many self-employed people come like, oh, Jacques, this is easy. I do my own taxes. And go, be careful, really be careful, because I've had clients who leave some stuff out and the bank says, no, I can't use that income. And then I got to go back to the clients, now they got to get an accountant to look at all this stuff and adjust stuff that should be properly, okay? A caveat. Here's what self-employed people do often. They're like, hey, Jacques, I am not paying the government 1 cent extra in taxes. I'm going to make sure my income is low. And I go, I get it, but if your income is too low, you're going to get a alternate mortgage. So where somebody's getting 2% on a prime rate mortgage right now, you're going to get 3.5%. That's not the end of the world. But guess what? That money that you save by not paying the tax man, you're going to pay it an extra interest right now. So, and you may get stuck in that alternate mortgage for many, many years. So which is better? To pay the tax man the money so you could save money long-term, or to, save money on taxes, but get a alternate mortgage for a long time. I'll let you to work out that math, but I'm just saying be very careful, okay? The other thing is, if somebody is anyone of like, Jacques, I am a chiropractor and I work in one clinic only and I don't own the clinic, then we call that sole income source, okay? We may need to get a letter from the income source. In other words, this is quite annoying to self-employed people or people like that I just described. Like, I am not employed, Jacques. I'm not going to get an employment letter from this guy. I'm like, okay, you just need to get a letter saying that you work there and you've been there for this long and you're an independent contractor. That's okay. But if you're a sole source, like you have only one income source, you're working for one company, you're on contract or something like that, or your taxes are not deducted as source, the lender is going to say, well, I need to know from that lender whether you're still working there. Okay, now how long have you worked there for? So that's important. This is also this is kind of like a lot of people don't think about this. I got a client, for argument's sake, who works at a major car dealership, and he's on employment letter, pay stub, straightforward, okay? But the person owns 49% of the company, but they're not on the articles of incorporation. Like, they're nowhere to be found. If you look at the articles of incorporation, they're actually not the owner. It doesn't state that. But if you look at, if you look at the T1 journal, they receive dividend income, which people in corporations can get. That gives us a clue that he may be a major shareholder of a company, even though he's not a quote unquote owner. He is an owner if he's the major shareholder. In this case, the guy had 49% shares of the company. But if he's not on the article of incorporation, I still have to treat the person like a self-employed person, and I'm going to ask for the shareholders agreement. That becomes quite sticky, okay? Because the other shareholders are like, wait a second, you're taking a document and showing that to a bank who we're all shareholders of, and it becomes quite sticky, but it is required, okay? So it becomes annoying, all right? So that was quite a mouthful, and you're still around, which is cool. Next one is the proof of income, okay? So this is where we check how much your income is. Now, if you have a corporation, we cannot use the corporation's income to qualify for the mortgage. We only use your T1 journals and notice of assessments. But we need the corporate financial statements plus the T5s. Sometimes we don't need the T5s, okay? We need it for the most recent 2 years, okay, for all. And so why do we need the corporate financial statements then? Is because we look whether the company is sustainable. So we had a situation over COVID where the client is, self-employed, getting the T1 journals, the income is right there, free declared. We look at the company and it's making $500,000 loss. And then the bank says, oops, I'm not so quite happy about the next thing. He asks, okay, well, we want to see 6 months bank statements from the company now. Remember, this was not an illicit issue. This was like nowhere to be found. All of a sudden, like the client's like, why are you asking me for 6 months bank statements? Can't you like tell me up front what you need? And I go, I wish I could. But this was now requested afterwards. So now the bank's saying, wait a second, the company is making a $400,000 loss and you're not making revenue. Imagine it's like, May, June, July in 2020, the bank's not going to approve that loan. Okay, so that's what I'm saying. Something's going to happen, right? And for all self-employed people, including people who own corporations, we will need your T1 journals, which is your personal T1 journals, your personal notice of assessments, and your T4As if they're applicable. Okay, that is if somebody, for argument's sake, is 100% commission and they may be a mortgage broker or they may be a realtor. Okay, so we need that, and we need those for 2 years. Okay, so I know, like Jacques, this really feels like you're asking me for my firstborn. It's crazy. I totally get it, and it's a lot. Okay, so but that's what you can anticipate if you're a self-employed variety. Okay, so let's talk about variable income applicants. Okay, so again, just like we said in big fat red here, for us to use any variable income, you need to be with that employer or the industry for at least 2 years. Okay, so Jacques, I just got my base salary is $65,000, but my commission last year was altogether my income was $90,000. I can use 90,000, right? Nope. If you've not been in the same industry for 2 years, employed for 2 years, I cannot use 90. I have to use your base only. Okay, so that's why pre-qualification way before you're thinking about a house is so important. Okay, so these are the typical documents we'll ask for somebody with variable income. Now, these are people whose taxes are deducted by their employer. Okay, so they're not self-employed. Okay, so we will need a letter of employment. The letter of employment typically cannot be more than 30 days old, 30 to 45 days. Okay, we will need a most recent pay stub, and that pay stub, very important, must match at all times somebody's income. What does that mean? If somebody says, Jacques, I made $60,000 a year and I analyze the pay stub and it shows only 40,000, that's a problem. I can't use that. Okay. Or somebody's notice of assessment for the last 2 years show an average income of $125,000, and I look at the year-to-date income, and we're in November, and it shows only $65,000, I can't use the notice of assessment. So we only look historically back, but it still has to make sense today. The other thing that people often do is, Jacques, I know like last year, I made 60, but this year, oh my gosh, I'm in an amazing year this year. I'm probably making $120,000. Can you use like this year? Nope. I can only use this year in 2022 once you've filed your 2021 taxes, okay? So very important to know those things, right? And if you are a rental property owner, even if you are like salaried with a pay stub, I will need your T1 journals, okay, including the statement of rentals, okay, because I can't use the rental income in your NOA and I use the rental income for the property because I'm double dipping now. I'm using double the income. I can't do that. So I have to see that in here. And so this is important for some of you who have rentals in holding companies, okay? If you declare a dividend and you think, oh, I got a rental company in a holding company, I don't have to disclose that property. Well, if you take dividends from that holding company, I have to go to that schedule and I look in the schedule and see, oh, there's a numbered company. I have to ask you, who's that numbered company's article of incorporation? Like, oh, I'm the owner. What does it do? It owns real estate. Well, now I have to see all of the real estate inside that holding company. So what I'm saying to you is, it's not just as simple as saying, oh, I need your T1 journals. Again, we have to ask you for a full set of T1 journals, okay? Or I've had a client whose father has got a business in Holland, and you know they send money this way because he's a shareholder there. Well, now I'm going to ask about that income. It gets quite crazy, okay? Some of the income is sometimes asked is the T4As. If somebody is like, you know, 100% commissioned or investment income, T4s. This is very popular right now in COVID-19, okay? During COVID-19 days. So in 2020, you all knew what happened with COVID-19. And so a lot of people got the EI income or CERB from the government, right? And so we cannot use CERB or EI income. You need to understand that, right? We cannot use that. So the NOA looks great, like, woohoo, I didn't drop a bit my income, my NOA, Jacques, look, it's right here. And I go, yes, but I can only use a T4 income or other non-government like grant income. And so we look at the T4. If the T4 is, so we'll most likely, if you have a variable income component to your income, we will most likely ask you for your 2020 T4. If you're taking dividend income, whether it's from you've got some shares with an institution or your own company, will ask for T4s most likely. And sometimes the most, for some people who we would not normally ask for a T1 journals, we may need them if a bank wants them, okay? That was a mouthful, I get it. It gets quite boring and tedious. But regular income applicants, these are really straightforward. I need a letter of employment, no more than 30 days old, a pay stub, and sometimes we need the T4s, as I just explained, okay? So here are some other income sources that clients can use to qualify for mortgage. You may not know this, but if you have children under the age of 12, in other words, if the children are under the age of 12, on the day that the mortgage closes, we can use what's called the Canada Child Benefit Income, that child tax benefit. We can use that for mortgage qualification purposes. So we will ask you for your 3 months bank statement to show us, you know, the money consistently comes into your bank account, and we'll actually ask you for your birth certificates for your children to make sure that they are under the age of 12, okay? And for pensioners, if we ask them for documents, it gets crazy. We ask for all security documents. We ask for Canada pension statements, pension statements, T4As, 3 months bank statements. It gets crazy. And then on top of that, we ask for notice of assessments and T1 journals. So we snow them under with documents. Crazy, okay? Investment income, so somebody's like, I'm retired, but I get a lot of investment income. So we will need investment statements, T4As, 3 months bank statement, et cetera, et cetera. Important, if somebody is divorced or separated and they get money from from child or spousal support, we need the separation agreement. We always need the separation agreement if somebody is divorced or separated, okay? We need 3 months bank statements. We need the most recent 2 years T1 journals and most recent 2 years notice of assessments. Whew! That's a lot. So that's the end of what we need for income. So you can see I've left a lot out here, okay? So confirmation of funds, down payment. This is a little bit shorter, but very much important also. So the supporting documents we need from you pretty much is there to prove that you have sufficient funds and it's down payment and closing costs, and that your funds are from acceptable sources and meet legal requirements, okay? So very important for you, all funds must meet Canadian AML, anti-money laundering, and FinTrack legal requirements and the lender's requirements. Remember, banks or lenders may have stricter than government requirements, but they cannot have more lax requirements than the government, okay? You must have a minimum criteria as the government's criteria, okay? Where the government sets criteria. Okay, so AML, one of the things that really bug people is the AML, anti-money laundering regulations require you to verify and provide a paper trail for all unmarked deposits into your bank account of $3,000 or more. So, you know, you transfer, as I said in the beginning, you transfer money $3,000 or $4,000 from one bank account to the other one. I will ask you for a paper trail to go all the way back until we actually see the source. This becomes really, really annoying when it becomes in a family situation. So somebody gets $25,000, okay? Their brother says, oh gosh, I'm in a bit of financial pinch. Can you just give me $5,000 to like, just, you know, help me until next month, I'll give you the money back. It's like, of course, you're my brother. I sent you the money to you, and now all of a sudden, or even worse, a friend, okay? A nice friend to give your friend $5,000, right? But your friend says, can you give me $5,000? I'll give you it back next month, okay? You send it to your friends. Now you're going to buy a house. And all of a sudden, here comes $5,000 back into your account, okay? And the bank says, where'd you get that $5,000? Under the AML, we have to ask the question. You go, no. It's money I lent to a buddy of mine. I'm like, no. That's a gift. You cannot get a gift from anybody else but your parents, legal guardians, grandparents, or siblings. That's it. Nobody else counts as are eligible to be donors. So like, but it was a loan to my friend. Like, well, if it's a loan to your friend, you're gonna have to let your friend write a letter and give it to you, and then you'll probably have to sign a statutory declaration at the lawyer saying it was really a loan and not. See what I mean? You did an instant act to help your friend, but under the Anti-Money Laundering Act, we document you until you're like in a coma. I'm joking, of course. Okay, so important to note that, right? The other one is, so in other words, if documents are from your own source or resources, so investments, RSPs, you know, savings, we ask you for 3 months bank statements, investment RSP statements, okay, and showing the money there, okay. Then 15 banking days, let's say it's from RSPs, 15 banking days by the latest 15 banking days before the closing date, we would need to see a bank statement that the RSPs were actually withdrawn and put into your bank account and ready to be used for the closing costs, okay? So this is also an issue, especially here, you know, you're asking for 3 months bank statements. Wait a second, John. What has it got to do with the bank that I went to the beer store and bought beer twice this week? You're like, I don't want the bank to see it. I get it. I totally get it. And some clients will black that out. Well, if you black that out, guess what happens? The bank can say, what is that? And it's like, as I said in the beginning, sometimes I even think it's intrusive, right? But, you know, it's the law. Like, what do you, bank can decide, don't worry, we know, it's not a big deal, you know? So just, you know, so if you don't like that stuff to be shown, then make sure that you keep a separate bank account just for your investment income and stuff like that, okay? Next one is gifts. So when you get a gift, as I said earlier on, it can only come from a parent, legal guardian, grandparents, or sibling, not my cousin or my uncle or my best friend. Can't do it, okay? So we need to give you a gift letter, a lender issued gift letter, and then the donor and the receiver has to sign that letter. And we also need bank statements from you showing that gift amount, the exact gift amount is deposited into your bank account. And we may also need bank statement from the donor showing the exact gift amount left their bank account. So in other words, you can't have 30,000 leave their bank account, 45,000 arriving in your bank account, and the gift letter says 50,000. They must all match. Okay, so that's important to understand. Okay. Borrowed down payment, this is unsecured. This is only for insured mortgages. Be very careful here, okay? Now, it's insured mortgage if your down payment is less than 20%. You are allowed to borrow a down payment from an unsecured source. That's like your bank line of credit, okay? Not a line of credit against your home. You are allowed to do that, but we need an unsecured line of credit statement from a major financial institution. You cannot borrow money for families, from family for a mortgage. You cannot do that. It must be from an institution, okay? And the line of credit statement I show you must have enough credit available for the down payment. Closing costs cannot be borrowed ever, other than from a secured line of credit. Okay, so this is the next point here. You can borrow it from a secured line of credit, and that means that it's from a home equity line of credit and from your line of credit, not your friends, your line of credit. So you've got one property, you want to buy another property, you want to borrow from that line of credit, you can do that, okay? For a sale of property, we obviously need the mortgage statement for the existing property you're selling, the sale agreement, and a solicitor statement of disbursement showing where the money is actually going, and a bank statement showing all the money deposited into your bank account. This is an interesting one, wedding gifts. So people are like, sure, I just deposited $25,000 in my bank account. It's for my wedding. How am I supposed to prove that? You're right. And so what we need, it's quite weird and funny and actually quite cute. We need a wedding invitation to show that your and your new wife's name is exactly on that wedding invitation. And then we just need a bank statement showing that the money was deposited into the bank account, okay? And that's what we need. Now, this is also an interesting one. There is no law in this country that says that you must deposit all money that you have into your bank account, okay? There's no law, no such law. But we call this money under the mattress. Literally, that is the money, okay? And this is, it's cash that is not in a bank. A lot of people these days are saying, I want to keep some money at hand. Like some people saying, I want $30,000 for my house. Just in case something happens, I've got cash, okay? These funds cannot be used until it has been deposited into your bank account and it's been in your bank account for more than 90 days. Very important, okay? This is offensive to people like, no, I don't want to do that. Well, unfortunately, that's what it says you got to do, all right? We are essentially done. I want to say this to you though, just to kind of end it, is to say that I get it. It is a lot of work to gather documents. It is annoying, and I said it's sometimes even intrusive, okay? And we get it. And so that's why we will always ask you for as little as possible or as few as possible documents, okay? And we don't want to irritate you. So that's why we don't make more friends by irritating you. We know that, okay? And we don't want to delay the process, but we always say, if given a choice, we would rather err on being too thorough and maybe, hopefully not, irritate you rather than to request as few documents as possible and too late and then disappoint you later. That is not an option for us, okay? To put you at risk is not an option for us, okay? So you can reach us. This is our email address. We share an email address so we can serve you well. You can email us there. And this is my official address. That's a virtual address. There's, some of you who kind of checks the phones, but we are not there. But you can email us. We have crazy social presence. You can contact us through there. We're a marketing team looking out for your messages. I want to thank you again so very much for joining us tonight. You're great. And remember our next webinar on the 27th of July. So for my team and I, have yourself a great, great night. And thank you again for joining us. Bye-bye.